Ladies and gentlemen, good day and welcome to the Birla Corp Q4 and full year FY23 earnings conference call hosted by HDFC Securities. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajesh Ravi from HDFC Securities. Thank you, and over to you, sir.
Hi. Thank you, Darwin. Good afternoon, everyone. On behalf of HDFC Securities, we welcome you all to this Q4 and full year FY23 earnings call of Birla Corporation, hosted by us. From the management team, we have Mr. Sandeep Ghosh, MD and CEO, and Mr. Aditya Sarogi, CFO, to discuss the same. Thank you to the management for their time, and I now hand over the call to the management team for their opening remarks, which will be followed up by Q&A session. Thank you, and over to you, sir.
Thank you very much, Rajesh. This is Sandeep Ghosh, and I have with me Mr. Aditya Sarogi, our CFO. First of all, thank you so much for joining the call. I find a very large number of participants, which kind of warms our heart, and for you taking so much interest and taking the time out to be with us. And we are also, for us, this is a maiden conference, so we are also very excited to be able to communicate with you, engage with you. Since this is our first call, probably I'll devote a couple of minutes to introduce the group to you, because sometimes there is a bit of although all of you are from the investor community, you have a better idea, but still sometimes I find the construct of our group or the image of a group is slightly hazy in the external world. We are part of the MP Birla Group. MP Birla Group was set up by Mr. Madhav Prasad Birla, who actually is not really known. He was the man who had, helped Mr. G.D. Birla set up many of his thriving industries, from Hindalco to Saurashtra Chemical and many others. He was the man who has assisted Mr. G.D. Birla, who is his uncle, to do that. But this particular company, Birla Corporation, our history goes back more than 100 years. We are the first Indian jute mill, which still operates and is one of the largest players in the jute sector. But Mr. MP Birla diversified the jute jute business into a multi-product company. After he passed away, his wife, his partner, Ms. Priyamvada Birla, took reins of the company. And the progress, apart from on the industrial front, where we have other group companies in the in the cables field, we have it in Guargam and others, but we have a substantial presence in the social sector. Not many people know Bombay Hospital is something we are associated with. The Bellevue Clinic in Calcutta, which is one of the very well-known private nursing homes, are again part of our group. Similarly, we have the South Point School, which is once part of the largest school in Asia as per the Guinness Book of Record in terms of number of students at a single campus. And it's one of the leading schools. That's part of the group. We run educational institutions at other places. The iconic Birla Planetarium of Calcutta, again as MP Birla Planetarium, is part of our larger family. We have two major hospitals other than this, one in Chittor, which is a newer hospital which came up, plus in Satna, which is one of the first hospital, multi-speciality hospital, which is there. So we have a fairly large presence also in the social sector. And that's why we say our group's value is heart and strength. Strength would define our emphasis on technology and excellence, and whereas the heart is the way we go about it, the larger good rather than pure business needs. And that's how this whole I was in the company at that point in time. Some of you know I was with Birla Corporation earlier, then I took a sabbatical for 3 years and now come back as the MD CEO. At that point in time, this heart and strength motto was developed. And we remain very close to it because that is, I think, the real ethos which our promoters lived by. So along with Mrs. Priyamvada Birla, Mr. Rajendra Singh Lodha, he was also part of the evolution of the group. Mr. Lodha, again, is not known. He was not just associated with the MP Birla group, but he was associated with the larger Birla, at that point in time, the undivided Birla empire. He was one of the very close associates there. And he had a very long, what I might say, an emotional connect with the entire family and the group. So he, therefore, took keen interest in the evolution of Birla Corporation when it was under the stewardship of Mrs. Birla, and he led it to afterwards till his untimely demise, when Mr. Harsh Lodha, his younger son, who was a brilliant chartered accountant, and he took over charge of the company. And since then, he has been leading it, and a lot of you who have been following the history of this group have seen that how the group has been transformed under Mr. Lodha's leadership. The other very interesting thing about our group, if you see our board of directors, composition of board of directors, we have in fact a majority of independent directors on the board. And each of these people are people of great standing and who are highly respected. So to take a few names, we have Mr. D.N. Ghosh, who was the former chairman of SBI, a long banking experience, part of many company boards, Philips, Peerless, and many others. And he's there. Then we have Dr. Deepak Nair, a very well-known, renowned economist, former Vice Chancellor of Delhi University, Jawaharlal Nehru University, and also at one point of time the Chief Economics Advisor during the period when the Indian economy went through the first round of liberalization. We have Mr. Anand Bodia, absolutely very renowned person, again bureaucrat, who is from the IRS service, who is known and who's also been involved in many industries. We have Mrs. Sailaja Chandra, who was the Health Secretary of the Government of India, in very critical times, like when there was a Surat plague, and then she was the Chief Secretary of the Delhi government under Mrs. Sheila Dikshit. So we have a profile of people like them. We have Mr. Vikram Sarup, who is head of the Paharpur group of companies. So in fact, our board of directors have got more non-executive independent directors than having either members of the promoter family or any related individuals. So we are not only professionally managed, I think we have a very strong, governance system, because all these people are of such impeccable credentials. They are very demanding as directors in terms of both performance as well as compliances, governance, etc. But they also bring a huge experience bank to the table, which I personally can vouch for, as in my previous stint as well as in the short stint after returning and taking charge of the MD and CEO. I have found extremely helpful and reassuring. So that's in a broad sense the background to the group. Now coming specifically to Birla Corporation as it stands now. I mentioned to you we have a juice business, but that's not the real focus of your discussion or interest, I would think. But today we are a 20 million ton company. Our capacity has actually doubled in the last 6 years, which many of you know has happened. Primary trigger was the acquisition of the Reliance business, Reliance Cement business, which we acquired initially with the Maihar Cement plant, which is the integrated unit, and the Kundanganj grinding unit. And what was significant was, it's perhaps not known, we didn't get a business on the platter. When we took over the business, the capacity utilization of those plants was very low. We were able to ramp it up not only to the maximum capacity, both Kundanganj, which, had a lot of incentives, part of being under the UP government, but also Maihar, which again was an incentivized unit and modern plant, but we were able to take its capacity utilization very quickly, which to the almost maximum, maxed it out, with something which Reliance had not been able to do earlier. But what was, I think, more creditable, or for us, a lot of people didn't think Birla Corporation, which was then a smaller company, usually dealing in the lower end of the market, the price points, would be able to handle the brand, taking over a new brand and, positioning it at the premium end. We didn't have the luxury at that point in time, unlike some other companies which went through a taking over process. They had a 2-year kind of a period when they could use the brand of the old company which they had acquired. In case of Reliance, we had just about 3 months window when we had to just change it to a Birla Corporation brand, and thus was born Perfect Plus, which is the brand. And very few people at that moment thought that we will be able to penetrate and position it at a higher end, and not just in terms of the consumer or the final product, but they didn't think that we would be able to attract the distribution system, we'll be able to retain the sales force there who are used to working in a different environment, at a different operating when we merged. I think that was the biggest success story over there. And therefore, today when I look at it, I don't look at the success of the Reliance merger in terms of just acquiring physical assets of production. The real value of acquisition which has been unlocked is by the assets which we created, both in terms of the brand and the distribution or go-to-market, or route to market, which you would say, facility. But simultaneously, what we were able to do, which I personally take a great deal of satisfaction, if not pride, is the integration of the distribution system, and also the integration of the manufacturing units. Today, many companies, big companies, are today trying to do so-called cross-branding and other things, trying to produce from other people. But we did it way back in 2016, 2017, when there was a seamless amalgamation of making products, both of the Reliance brand as well as the old legacy or heritage brands, as I call them, of Birla Corporation, being produced equally from any of the plants. And that was achieved by, it's not easily appreciated, by the kind of quality parameters we established, so that the end consumer, I come from a FMCG background. Most of my life is spent with in a soap manufacturing and soap and detergent manufacturing company in the levers. Where we buy a soap or a toothpaste, you never look at where it has been made. Unlike in the cement business, where people keep asking whether which plant it has come from. Even for the bigger plants, I remember people will ask whether this has come from Jamul or from Chaibasa or from some other place. And that used to be even in the case of ours. But today, look at it. We supply products in the UP market from 6 different plants. And nobody ever needs to know or cares to know where it is coming from. We supply the UP market from Kundanganj, from Raebareli, from Satna, from Maihar, and on the other side, we bring it from Chanderia as well. Okay, so we are supplying them from all sides to all, and not just in restricted areas. There is clear swapping from one area to the other, but nobody really bothers today. And that is where today, when you go into the market out there, nobody will tell you that we are a Reliance distributor, or we are earlier they would call themselves a Satna Cement distributor. Today, everybody is an MP Birla distributor. Earlier, never people didn't think that some of the top end so-called quote unquote A category companies, dealers will come to us. Today, we have people very happy to join us. A lot of people keep coming, knocking at our doors. And I think the ultimate test of the pudding is in the people. I recall even when I joined this company in 2015-16, a lot of people raised their eyebrows. But today, constantly, we have people from the top companies, I don't want to take names, who are willing to come and join our group. So that shows the brand equity, the change which has happened, and why I'm emphasizing on this, not to beat our drum, but because I think when investors talk about it, generally we all talk about how many million ton capacity, what is the value of plants and the assets on the balance sheet, but we don't tend to look at the valuation of the brands as well as the valuation, what I call the commercial assets. Commercial assets I would term as your distribution network, logistics network, and most importantly, the people. Because without a sales force who is able to position themselves, a lot of people try to position themselves just by launching a new brand at a premium end, and between people who are successful and not depends on their ability to penetrate that. I think that's where the strength comes, and why again it's relevant is this. From here arises my confidence of what we are trying to go and do in Mukutban, which I think is a great deal of interest for a lot of you, being a newcomer in a totally new geography. How are we going to penetrate that market? So that's kind of giving you a backdrop. And having come back again after a hiatus, my sabbatical, I'm sometimes a bit amused to see from that when I used to be here earlier, 4 years ago, when we used to set out this, our quarterly press releases and bulletins. I started writing at that point in time how much is the premium percentage in our portfolio. Today I find that, not only everybody is writing. Day before yesterday, 2 days back, I found a Money Control article saying that how cement players are today trying to premiumize their portfolio. So to some extent, we have been, I think, a little ahead of the curve in this matter, because today, our premium portfolio already, we are selling, we have reached 54% in what we call, the people may quibble as to what we call premium and what is the premium of other companies, if you would look at the so-called earlier biggies. But that's not the point. What I would look at my premium, what was my modal price or the base price at which I was selling the cement earlier, and what is the premium which I'm commanding over that. And that is where I think the point comes in. Or when you look at blended cement, we'll come back to these points. We were at an 85% much earlier. When we had moved away practically from OPC, except in very small markets, very small and non-trade as well. We had focused totally on trade sales, and that is a mix which still remains. We'll come back to it, how it has helped us even in the last quarter, despite prices remaining flat in the market, how we have been able to protect our realizations and in fact improve the realizations despite a slight weakening in our key geographies, which is central India. We have been able to do. I think these strategies have paid off, and these are the strategies which we are trying to replicate in Mukutban, and we are already seeing results of that. One of that we had touched upon, much to the surprise of a lot of our people inside and outside. We hit EBITDA positive in Mukutban by March end, in March end last fiscal. And that, I think, was ahead of many people's expectation. And we were, even if you look at the total investment, the financial investment which has gone in, what I call not loss, but I'll treat it as an investment, we have been able to manage the outflow for Mukutban at lower than what was initially projected in our internal budgets. And that's again happened because of this similar kind of strategy which we are focusing. And you'll find those, I know some of you follow the market very closely. You've got a lot of links with the dealers, trade, and you've got your own market intelligence. You'll find that our thrust even there is on the trade segment, and that too with Perfect Plus. And what is beginning to give us results today is that Perfect Plus has got established as at least it's our flagship premium brand, which today is positioned from a marketing language, if I call, in the entire HSM geography. HSM stands for Hindi-speaking markets, as they call it in media. In the Hindi-speaking markets, with being there, I am today able to leverage national media to promote Perfect Plus across all these relevant geographies, which is UP, Bihar, Madhya Pradesh, Haryana, wherever our footprints exist, Rajasthan, and now going down to Madhya Pradesh as well. So that is the synergy which we have got, and that is part of a strategy which I don't think is easily realized, and that's what differentiates us from many of our peers in the same league or in the same mid-cap or mid-sized brands which you've got. The kind of synergies which the way our growth has come, our growth has not come in disjointed manner that you are there present in one region in the east and then you've got a pocket of presence right in the west. Our growth has happened contiguously. So if you see from Bengal, we are not present in Chhattisgarh, of course, Odisha, of course, but from Bengal you can draw a line and take us all the way once to the west, and then if you come down towards Maharashtra. I'm digressing a bit, and the importance of that is, again, something which people haven't realized earlier. I'm underscoring. Some may not have realized. I shouldn't be presumptuous in saying. Today people say, what will you do with your clinker in Mukutban? But one doesn't realize my clinker from Mukutban can reach Durgapur as cost efficiently as we could do earlier from Maihar or Satna. And in the process, my Maihar and Satna clinker is getting released. If I take excess clinker from Mukutban to Durgapur, my Maihar and Satna clinker is getting released for UP and Madhya Pradesh, which are my most profitable markets. So that is what's giving us people when they ask me why, how will you leverage this, if you don't have additional clinker capacity, where will you get your margins coming from? And that's the little bit of a clue you have that how we've been able to manage our results in the last quarter. It is by no sleight of hand, no accounting jugglery. It is these kind of adjustments which have allowed us to deliver the results which we have in the last quarter. Again, Mukutban does not restrict me to be selling only in Maharashtra. Surely I'll sell in Maharashtra as much as I can, and as it becomes profitable, more viable, obviously I'll maximize Maharashtra. But today I'm from Mukutban, I'm able to supply on a contribution positive basis to South Madhya Pradesh. And what's that doing for me? Is releasing South Madhya Pradesh capacity for me from Maihar, which I was selling earlier, and today Mukutban can supply all the way to Khandwa. Even if I want to take it, I can take it all the way up to Jabalpur, etc. But I may or may not take it. But I'm able to supply southern Maharashtra and releasing that amount of clinker and volumes for me to go and sell and in my core markets and protect my market shares there as well as my price points there. So from Mukutban, I have been supplying South Madhya Pradesh. From Mukutban, I have been able to take material. Now, those of you keep tab in the market would know an area which was out of reach for me earlier, which was South Gujarat, which was not, viable for me to sell from Chanderia, where I could take it. Today, Mukutban is giving me a reach there. Not to mention when Telangana becoming more, the price positions improving there, Telangana is my proximate market. So some of these elements which are happening, I think that's together, it gives us a great deal of confidence going forward. I don't want to repeat to you what are the demand projections in the geographies where we are there. All of you know that much better than me. But it gives us confidence that even if the price situation remains static going forward, we are quite well placed in the coming year to realize our ambition. Having said so much, I will take a pause and pass on to my colleague and CFO, Ms. Adi Sarogi, to give you some more, idea of the financials before we come back to taking questions. Thank you.
Good afternoon, everyone. So, in the fourth quarter, we have posted an EBITDA per ton, including Mukutban, of 615 rupees per ton, which is marginally lower than what we had done in the corresponding quarter previous year, which was 650 rupees. So, there is a drop of about 35 odd rupees. That's mainly on account of higher fuel costs, which to a large extent we were able to mitigate by higher realization. On a sequential basis, our EBITDA per ton has grown by 240 rupees. Now that's a function of higher realization, which, as Mr. Ghosh explained, despite benign market conditions, we have been able to improve by better geo mix and higher blended cement and higher premium category of cement, as well as reduced cost. I now request the audience to come up with their questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you. First of all, thank you for hosting the call, and I hope we will continue to doing calls after every quarter results. It would be a great opportunity to interact with the management. I have 3 broader questions. First, definitely on the Mukutban. So, in terms of the volume, it is also good to see that we now turn EBITDA positive in the month of March. So, how much volume we have done in the fourth quarter and the FY23? How we are looking at in the FY24 and FY25 in terms of increasing the utilization? At the same time, in terms of the profitability, so now we have turned into EBITDA positive. So, how are we looking at FY24 as a full year? Can we see the EBITDA per ton equal or maybe higher than the existing plants for the Mukutban? And also in terms of the incentives for the Mukutban, so what are the incentives, if you can quantify also how much we have booked in the FY23 and how we are looking at FY24 and 25?
I would like to take the first part of the question and clarify certain things about the strategy of Mukutban before getting into the specific numbers of volumes and incentives, etc. Our first objective for Mukutban is not to ramp up just for the sake of ramping up, but ramping up profitably. And when we talk of ramping up profitably, level is ramping up the clinker capacity. Because unless I run my plant in a continuous basis, my cost of production goes up. And that's why I hinted to you that Mukutban clinker we would be using not just in Mukutban, maybe in other places as well, because that is what is going to give me better utilization of my clinker capacity. Now thereafter, my trick in Mukutban is how my costs come down. One of the problems which we faced in the previous year was Maharashtra, much to the contrary to expectation, prices in Maharashtra had not gone up. In that situation, if my costs were high, my ability to spread across in the market was difficult, and some of the growth which was coming from the infrastructure segment, which are obviously into OPC and it is at a non-trade at a lower level, I was uncompetitive there. But that is going to change dramatically, has already changed. That's what has made us now today EBITDA positive, because my costs have started coming And as I utilize my plant better, my costs will further come down, increasing my competitiveness in the primary and the secondary markets of Mukutban to increase my volumes. So what is relevant is not really what we have done in the last quarter, but my kind of exit numbers. I am exited month of March at about 1 lakh tons of cement from Mukutban, and we want to exit next year at about 2 lakhs in terms of cement from Mukutban. And obviously the average will be somewhere in between 150, 160 would be the average through the year in terms of cement when you're talking about. But my clinker utilization correspondingly, we expect it to be much higher because my ambitions are higher, which will, allow me to take Mukutban clinker either through swapping, by which I swap close by and I use other clinker in my plants afar, or as I told you today, if you look at the map before you from Nagpur to Durgapur, is not that far as people think compared to Maihar to Durgapur, etc. So there are options for me. I could be swapping Mukutban clinker, getting clinker in Durgapur from somewhere else, or otherwise to be using my, therefore corresponding clinker utilization would be much higher than the 2 lakh tons which I'm talking about of cement when I'm exiting the year.
That's a great thing. Just a second on the broader costing in terms of reducing the overall cost, not only the definitely Mukutban you have mentioned, sir, but as we mentioned in the press release in terms of the Project Sikar and 4Vs. So broadly, if you can highlight in terms of the raw material, logistic, power and fuel, so including the increasing the mining, the coal production, how we are in terms of, and also if you can quantify in terms of the number broadly, how are we looking at in terms of reducing the cost in the next year FY24 broadly?
On account of these specific projects that we have undertaken on part of the management, we expect a saving of at least 50 rupees a ton. Okay, and coupled with that, the better realization in terms of better blended cement, higher volumes and higher premium cement, our overall profitability is definitely going to be much higher than what we have done in this year, which was more of an aberration because of Mukutban being the first year. Just to give you a sense, when we started Mukutban operation, our variable cost of cement was more than 4,500, and when we exited in the month of March, it was less than 2,800. So you can now understand, with that kind of a cost structure at the beginning, the more we sold, the more losses we would have incurred. So we were deliberately not pushing the volume. Now that our cost at Mukutban has become competitive, in fact, in the next financial year, it's going to come down to another 300-400 rupees. So with this cost competitiveness, so we will now be in a position to ramp up our volumes. Coming to questions regarding incentives.
Just 1 minute.
Yeah.
On the cost, please keep in mind two things. When you are talking specifically Mukutban, one is our incrementally or linear reduction of costs which we are doing, but there are certain, options available to us. I do not want to elaborate, which are also going to give us step change in cost reduction. It is to do with in the raw material and the fuel, etc., which is going to come. We have already, as you know, commissioned WHRS. On the fuel and power side, there will be other things which are going to give us step change, step reductions in cost over there. But similarly, nationally, if I were to take this thing, we are one of the companies which will be using maximum percentage of our own coal because of our captive mines, which is going to go up further. Our work on, we have got a lot of work to do on AFR, which is now picking up, so our percentage of AFR will go up. Also, our alternative energy, green energy, that is things will go up. So you will see much more improvement. Though I was saying about 50, We will not commit anything right now, but we expect our ambition is to do much better than that on the cost front.
So, of course, that 50 did not include the savings that we expect from commissioning of the Vikram coal mines in the second half of this year. So those are purely on account of the improvement projects that we have considered at the operational front. And coming to incentive on Mukutban, one question was asked. So it is approximately 600 rupees per ton, but that will start getting reflected in our P&L only towards the middle of H2 of this financial year. So, the full effect of the incentive will really be seen in the result of the next financial year.
You might like to explain to them why.
Yeah, because currently we are availing of the input tax credit, which got accrued on account of capital expenditure that we did. So till such time that input tax credit gets consumed, we are not required to pay GST to the government. And since we are not paying any GST to the government, so there is no question of getting any refund of the GST. So that situation of payment to GST will arise towards the middle of the second half of this current year. And that's when we will start accruing the incentives of say about 600 rupees a ton in our P&L account.
And just to give you a lead, so today when I'm selling, that's why under no compulsion to sell everything in Maharashtra and incurring a high loss. I can restrict my Maharashtra sale instead of trying to spread thin and go beyond. I am able to sell Maharashtra in my proximate areas of Vidarbha and other markets, whereas I have the flexibility to sell the same quantity if I get a better realization, whether it's in MP, in Gujarat, or in Telangana. And once my incentives start kicking in, that's going to change the game. That's going to be a game changer as far as Maharashtra is concerned, and then I can really go all out.
So we have been able to achieve this EBITDA positive status without incentives.
Got it. Last, sir, on the expansion and the date front. So we are.
Sorry to interrupt, sir. We request you to please rejoin the queue if you have further questions. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. You may rejoin the queue if you have further questions. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity and congratulations on good set of numbers and also in terms of being positive on the Mukutban plant. So 2 questions. One is with regarding to the expansion, the roadmap ahead for our next phase of growth to enhance capacity to 25 million ton, which we have talked about in a couple of AGM interactions in last 2 years. Both, and if you could share some details with regards to the clinker and the grinding capacity which you are going to add, the location for the same. Is there any inorganic expansion opportunity being explored? So what I'm trying to understand is the expansion roadmap for the next 2-3 years. Shall I ask the second question?
Yeah. 2 things you need to keep in mind in terms of reality is a COVID situation which happened, which delayed a lot of plans, including our Mukutban expansion. There was no problem from our side, but in terms of the construction, everything, it went up. So now our first objective would be to not only maximize capacity utilization, but make it, as I said, maximize it in the most profitable way. So this 25 million ton target remains, so does our 30 million ton going forward. All of that remains, but there may be a change in timing. In terms of sequencing, our next priority would be setting up the second line in Maihar, which we will look at, and then start also putting the grinding capacities for that additional clinker which is going to come in, And for that, we have got 3 or 4 auctions which are lined up, but we will go in terms of hierarchy and depending on how the market evolves. So that's how we'll go. But we have today enough, shall I say, I'll not call it headroom, but I'll call it elbow room to, optimize our existing clinker availability more profitably and generate the cash flow, bring down our leveraging so that we are able to undertake the next expansion at a time of our choosing, depending on how the market is going.
Sure. My next question is, hello. Sir, my second question is about the power and fuel cost. Am I audible? Hello?
Yes, sir, you are audible.
Yes. Sure. So, sir, with regards to the power and fuel cost and the inventories of coal and coke and coal and the pet coke, from the data available through the results, like last 5 years, except for FY23, our average power and fuel per ton cost used to be around 1,000 to 1,100 range, which last year for the full year went up to 1,500. And in the previous 3 quarters, we were averaging around 1,600, but we have done exceptionally well in the fourth quarter when we have been able to bring this down to around 1,290, 1,300 rupees per ton. So how do we see this going further improvement with regards to, the various initiatives on WHRS, captive power, our own coal coming in, the inventories which we have? So if you could share some details or some light on the power and fuel cost going ahead.
See, my own sense is that in the next financial year, our power and fuel cost should be lower by about 250 rupees, at least 250 rupees a ton, if not more. On account of various initiatives that we are taking, whether it is basic recovery or our own starting of become coal mines, and even the solar power plant that we have set up. So it should be north of 250 rupees.
So, Aditya sir, just to clarify, this 250 rupees you are talking from the amount from the fourth quarter, that is 250 incremental from 1,300 rupees per ton?
From 1,500 rupees, that is the fourth quarter was 1,500, no?
Fourth quarter is around 1,300, sir, power and fuel cost per ton basis. For the full year, it is 1,500.
Yeah, from 1,500, we are expecting a reduction of more than 250 rupees per ton.
Sure. Thank you so much. Thank you. I'll come back.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Hi, good afternoon, and congratulations for hosting this call, and thanks a lot for hosting it firstly. So, on Mukutban, so you said that you have not sold much in Maharashtra. So how are you placed on the distribution network there, and when do you plan to build out the distribution network? That's the first question.
Don't get me wrong. I've not said we haven't sold much in Maharashtra. Obviously, when I'm selling 1 lakh ton, my majority will be in Maharashtra. But my distribution network, as you are saying, I would first concentrate. I have my seeding done much further, almost all the way up to Pune and on this side of Bombay, etc. But there is no point activating that network beyond a point until I'm able to profitably supply those markets. So when I am selling 1 lakh tons, I'd be selling at least 80% of that within Maharashtra even now. But I would focus in the more proximate markets of Vidarbha, Khandesh, and I would consider right next to us the Telangana area, Nizamabad and all those things is also being proximate markets. Those is where I will concentrate first, rather than push myself thin to go further down to Aurangabad, Pune and other places until I am profitable. But that is a dynamic situation. As Mr. Aditya Rogi has said, the way my costs are dropping, it's a matter of every other day when you'll find my expanding my footprint. And for that I am ready. We have earlier shared with you numbers which I don't have handy as to how many distributors and other people we have already appointed. Our sales teams are ready, but right now I am focusing and concentrating, bringing my troops in to much more to operate in my proximate areas within 150 to 200 kilometers of my plant before I spread next to the 300 kilometers or so range. 250 to 300 kilometers radius is what I'll move after this. But at any point in time, you will find at least 80% of my volume from Mukutband, the cement volume, will be sold in Maharashtra. And once the whole incentive kicks in, then as I said, the ball game will change. And by then, I suppose I'll be on my third con call with you, and then we'll give you a better picture.
Sure. Just to understand this better, but you said that the incentives have not been accrued. So if you're already selling, like, won't some incentives accrued for the GST credit?
How it works is, first, before you start getting the incentive, all my GST which I have paid before, and which is mainly on account of the plant, that is lying to my credit. So first that will get offset. And after that has got offset, only then I will start getting the incremental credit, which will go into my bottom line.
Okay, understood.
So actually, just to clarify, whatever GST we charge from the customer, so that is not required to be paid because we have got a credit line in our books. So we use that credit to set off against the payment that is required to be made. And since we are not making any payment of GST, we are using our input tax credit, which is lying with us. And that's why we are not making payment. And since we are not making any payment, there is no question of claiming reimbursement from the government. Once we start making the payment, once we exhaust the full amount of input tax credit, that's the time when we will start making payment of GST to the government and then claim 100% of that GST from the government. I hope I am clear.
Understood. What is the total quantum of the incentive in rupees crore?
It is 100% of the project cost, so it will be around 2,300 crores. And it is available for a period of 20 years, and 100% of GST is available.
Sure, got it. And in the existing plants of Reliance, are there any existing left, or they have all expired?
No, we have incentive in our Kundanganj plant.
Okay, and when does that expire?
By the end of this financial year.
24, end of 24. I saw somewhere somebody saying that it's 23, it's expired. It's not expired. We still have at least a runway of one more year until other changes happen, which we'll discuss at an appropriate time. But we still have a full year to go before Kundanganj gets exhausted.
Sure. And just the last question from me, like on Kundanganj, there was plan to add 1.2 million ton there. So what's the status on that?
See, for your information, our rated capacity in Kundanganj was 2 million tons. So by internal optimization alone, we have been able to ramp it up to 2.7 million tons. And since we did not have visibility on clinker, that's the reason we did not make additional investment on the grinding unit immediately. So what we are going to do, as Mr. Ghosh explained, we are going to align our next phase of setting up grinding unit with the Mayer Line 2 expansion, so that we have got clinker to support the grinding units. So that is the manner in which we are going to expand our business.
So you think the Chanderia debottlenecking, clinker debottlenecking is actually, you didn't have the visibility on that one?
So that has already happened last year.
Okay, sure. I'll come back in the queue. Thanks. Yeah.
And you see, for the rest, not just answering your question, Chanderia clinker, if you see the overall clinker balancing in the northern region, there is enough demand for Chanderia clinker to be used in its own native markets. Market would be Rajasthan and going down south into Gujarat and also up in toward Haryana and Western UP. So there is not going to be excess clinker available to me from Chanderia to take into Kundanganj, and that will not be the most economical way to do it. But whatever we are getting today is 2.7 million. We will feed that. As I told you, getting a cushion from what we are getting from Mukutban and saving on some supplies which we were doing earlier to Durgapur, will be able to utilize Kundanganj much better this year, demand supporting.
Thank you very much. I'll come back in the queue. Thanks.
Thank you. Ladies and gentlemen, we request you to please restrict your questions to one question per participant. The next question is from the line of Kamlesh Bagmar from Lotus Asset Managers. Please go ahead.
Yeah, thanks for the opportunity, sir. Sir, all said and done, like you have a high trade cement share, blended cement, and I believe based on your data, your premium cement would be highest in the industry. But despite that, your margins are the lowest in the industry if I compare with your peers. So why is it the case, despite the fact that there was so much of harping being made on the part of blended, premium cement, every aspect of the cement production? And secondly, sir, our growth in the month of April has been hardly around 4 to 5% in terms of sales volume, despite the fact that the industry has grown at 15% and we had a benefit of the capacity addition at Mukutban. Why we have not been able to ramp up the volume?
First of all, I don't know where you have got the figures of April from, because we don't have that data to show that industry has grown by 15% and we have grown far lower than industry. I don't know the validity of that, so I will not be able to comment on that point. There is very little ramping up which we need to do, because our mother units, if I were to call them, leaving Mukutban, they are all operating some at even higher than 100% capacity. So where is the ramping up opportunity you are seeing? I'm missing that point too. Yes, our margins to some extent are curtailed, especially certain plants of ours. The cost is higher. Like my cost of limestone in Chanderia is higher. My Satna plant is an older plant, so their costs are higher. Mukutban, we have already told you, we are in the process of pairing. So it's not a question of we are not harping on anything. We're just stating facts before you. The facts to be verified in terms of our numbers of how much of each brand we sell and what is the price we sell and what is, I'm sure your market checks and dealer connects will tell you what is the our price points in the market. There is no question of either harping or making claims which don't stand. Those are based entirely on facts, and facts which can be, as I said, validated. So I really don't know where you are coming from in that point. Costs are an issue, and there will be various factors. If somebody is selling right next door, and if he has got a 4.5 million ton capacity, and he is selling right next door to the plant, and when I have got a 20 million capacity, my lead will be higher. I'm bringing sometimes clinker from Chanderia into the center somewhere. I'm sending from my cost would be higher. If I had a 1 million ton capacity and I sold within 100 kilometers of my plant, I would obviously have much higher margins. So I don't know whom you are comparing as peer group. Peer group comparisons have to be done on a like-to-like basis, not because somebody has a plant right next door to me, but in terms of. Similarly, on the reverse side, if you were looking at Mukutban, my neighbors there are big plants, or older plants, which have got their captive, right next to the coal blocks, so their power costs are lower. Obviously, their costs would be very different, and their mining costs are lower, so that will be different. So we have to see each element, but assume that I didn't have any of these premium volumes, which has been created over in the last 6-7 years. What would have been my profitability compared to anybody else?
Thank you. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, namaskar sir, and thank you for the opportunity, and we look forward for the continuity of these Concalls going ahead also. Sir, Ghosh sir, as you were mentioning that about the April numbers in terms of volume, but at least you could give us some color since this is the peak season for the cement. What are the pillars on the ground currently in terms of the what we exited March and how the situation is currently in terms of the offtake, especially from the government projects and also both from the trade and the non-trade segment?
Saket, you've been in the trade, you've been observing the trade much longer than I probably have been doing. You're much younger than me. April is not the yardstick for the season, and April is not really when the thing starts. And when you have one company selling 100 million tons in March end to completing that, you know what is the impact it has on the market. Okay. And while others also not giving. So I don't know again where the figures of 15% growth in April comes. You live in Calcutta, you know what is the situation in the Bengal market today. You know the pricing situation in the Bengal and the eastern markets. And you know the conditions of, you know, the rains, which are untimely rains which have happened in certain other parts of the country. All these are factors which are there. But once, as I think our overall projection, as most analysts have given, most of the, you know, firms like Raisel and others have given, one expects a healthy growth in volumes this year. None of us, I think, are optimistic about huge price jumps, as has been seen and some of you have reported. Attempts at price increase have not gone through or reverse rollback, and that's also due to certain industry dynamics which are going on right now, which I can't spell out. All of you are aware of what's happening between some big players, each one trying to secure their position. So our strategy is based on that prices are not going to go up significantly. Volumes are going to move in a healthy manner. There are any major dislocations, disruptions or hiccups going forward. And last bit, what you're talking about in terms of the government spending, yes, I think I've said before, I'm very, very bullish on the India growth story, and everybody is coming to recognize the investments that have gone into infrastructure. I think those are going to bear fruit. Like one has seen such things happening already in the Western market like Gujarat. Gujarat, you would have seen, had gone through an exponential growth in the last year, which boosted up certain companies' profitabilities, because with bullet train, with the expressway, everything and all the development which is happening on the two sides of that had boosted up Gujarat. The same thing I expect to see in Maharashtra now. And most importantly, with states like Madhya Pradesh, UP, both in the run-up to the 2024 election and in the run-up Madhya Pradesh and Rajasthan, etc., run-up to the 2023 end elections, you will find government projects like Pradhan Mantri Awas Yojana catching speed, and that's a sweet spot for a company like us, which operates primarily in what I call the urban markets. By urban, I mean rural and the small towns, that is tier 2, tier 3 towns kind of market, which are on the outskirts. That is where our strengths lie, and especially in the Hindi heartland, the HSM area of Madhya Pradesh. That's my core area of Uttar Pradesh, Madhya Pradesh. So I am, fingers crossed, I'm very optimistic about, getting results there. UP is going great guns just now in all respects. Rajasthan should be doing well. Western MP is, all of you know, Western MP, I'm very well positioned. If you do some market checks, my Perfect Plus has established its position in the Indore and adjacent markets very well. So I'm quite confident of that going. Keeping in mind, being very realistic about prices are not going to, anything coming up on prices is going to be bonus for me.
So small point on the EBITDA per ton, that since we did 615, that is taking into account Mukutban also, and now with the volume expansion coming towards from H2, so what should be the ballpark number, or what should be our endeavor going ahead as a combined entity to to for the EBITDA per ton number? So what are we eyeing? If you could give some color to it, in what ballpark number we can look going ahead?
Our sense is we are working with a number of 850 rupees per ton for the next year.
Okay, that is the average we are looking.
Yeah, average.
Okay, that's a significant jump.
Including Mukutban. Including Mukutban.
Including Mukutban.
Including Mukutban, including our incentives kicking in second half.
Just to give you a sense, our EBITDA per ton this year, inclusive of Mukutban, was around 480 rupees per ton. So from there, we are looking at a number of 850 rupees a ton for the next financial year.
Okay, and for the utilization levels, sir, can you give some color? What kind of cement volume we are looking, clinker and cement volume we are eyeing for the next year?
We are looking at more than 15% growth in volume terms.
Okay, so on a base of 15.73 million, we are looking at a
more than 15% growth in volume terms.
15% on a 15.73 which we have done for the year.
More than 15% growth.
Okay, sir. And lastly, on the jute part, sir, although it's a very small. I'll join the queue. Yes, and all the best to the team, sir. Thank you.
The next question is from the line of Mangesh Badang from Centrum Broking. Please go ahead.
And congratulations, sir, on good set of results. Sir, very short and crisp couple of questions. Firstly is on the limestone availability. So do you think of our plants would face the scarcity? And second one is on our coal blocks. So just wanted to have an update on the Bikram and Brahmapuri block when they would be operational.
So on limestone, I can state that in each plant of ours, we are having at least 20 years of reserves. Now coming to coal blocks, as I also already mentioned, Bikram we expect to start in the third quarter, October to be precise, and Multivaca we expect to start in November of 2025.
That 40% of the total central requirement will be met. And if you can give some idea in terms of rupees per kcal cost.
Once Bikram is fully operational, about 38 to 40% of our kiln requirement will be met through captive sources.
Great.
And once Multivaca is also commissioned and we fully commissioned, about 60% of our total fuel requirement at kiln will be met through captive coal blocks.
Okay. So just final rupees per kcal cost of the domestic coal compared to the current fuel cost that you have. If you can give some.
Sorry?
The cost of the domestic coal in rupees per kcal term that you would incur at their kiln.
Domestic coal?
Yes, sir.
Versus Bikram?
So the cost of that domestic coal on rupees per kcal basis, how much it would be compared to the current cost that you are incurring for all the rest of the plant on a rupees per kcal basis?
So current domestic coal cost currently will be between, let's say, 1.55 to 1.7, 1.75 depending on the region. Okay, and what is the second part?
Yeah. What would be your current cost?
Petcoke prices will be slightly higher. It will be in the region of 1.9 to 2.
Okay, sir. Okay, thank you.
Yeah.
Thank you. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Hello. Yeah. Good afternoon, sir. My first question is on your guidance. So last year, when we started hearing commentary on your media interviews, we understand there was a 15% growth guidance given for FY23 for volumes versus what we had like 10-11%. So where did that come from, whether it's from Mukutban or the other central operations? Secondly, what is our target capex for FY24-25 for full year?
Yeah, question was not very clear, but if it is on volume, as Mr. Ghosh mentioned, we consciously cut down our ramp up of volumes in Mukutban because the more we were selling because of high cost, the more losses were incurring. So our focus was really on the rationalization of cost and containing the losses rather than the mindless volume ramp up.
Now, I think, sorry, if your question is where the 15% is going to come from, it was going to come from Mukutban, as I said earlier. Mukutban, we've exited about 1 lakh. We expect to exit at 2 lakh tons next year. We have got elbow room in Chanderia, where we are going to increase in Chanderia. We've got in Durgapur, and we've got rationalization in central India, so it will be fairly well spread. Our objective would be to get a maximum growth in the profitable areas, which is our most profitable areas, which I would say, which is central India, where we would get it, but overall it will be fairly well spread across the region. So Mukutban itself will give us at least a bump of average 1 lakh tons per month.
Thank you. The next question is from the line of Naveen Shahdev from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir, and thank you for the opportunity. It's great to interact with you and hear your views, Sandeep, sir. So thanks again for hosting this call. So 2 quick questions. One is, you mentioned that for future growth, the next point, or you may look at line 2 at Maihar. Now, given it takes roughly 2 years for the capacity to come, at least 1.5 years at best, to get that capacity on board, what would you say as the tipping point to kickstart this project? Would it be a utilization of certain, that you have in mind, that once that it hits that, you think you go for line 2, or is it going to be some comfort on the net debt to EBITDA front? What would exactly that be? And my second quick question, in the interest of time, is what is the current state, or what is the current status of incentives receivable? I think this is more for Aditya ji. So what's the status on current outstanding incentives, especially from West Bengal, because we recently saw some other cement company provisioning a loss on that particular front. So your views will be really helpful. Thank you so much.
Before coming on the incentive, I'll just take your point quickly. As you know, for a clinkerization unit, there is both the outlay is much larger, as well as you rightly said, the time. It all depends, this is slightly fluid in today's world. We have to look at it from quarter to quarter. If markets improve, if my cash flows improve, if all I could be looking at a grinding unit in Eastern India, which I can still feed from Mukutban in terms of my additional clinker, and that might come up before I look at a Maihar line expansion. The Maihar line expansion, as soon as I go, that's as you said, it depends on my balance sheet, how much money I do. And if that is not happening, maybe I'll first go for Maihar. So these things we will get greater clarity as we move along, but we are quite confident that, as I told you, our existing capacity to give the reasonable growth, both in top line and bottom line, we are well placed. There are various levers available to us, including increasing the level of premium which we have got on our brands. I hinted about it to you that today my ability to more cost effectively invest on a brand like Perfect Plus has increased a great deal. So I would have opportunity to increase my margins, my premiums on those brands across the markets, expand its footprint, do other innovations. So those also will give me. So we are looking at both the top line and bottom line to meet the market expectations, the street expectations, to keep us going. And we will go in for the investment. We'll cut the coat according to the cloth available. I'll leave it to Adit to respond on the incentives.
Yeah, on specifically on West Bengal incentives, we also have some outstanding of 140 odd crores. But recently, so we had, because we are not getting the money, we had filed a petition before the High Court for recovery of the amount. And we are pleased to inform that sometime back, the High Court was pleased to direct the state government to pay us the incentives, which we still haven't got. So we have again gone to the High Court against the state government with a plea that incentive be disbursed immediately.
Yeah, correct. But the annual accrual is on the higher side and actual receipt is much lesser. Is that a correct understanding? Because last year also we would have...
See, actually, in this year, like, just to tell you, our receipt of incentives was about 200 crores. Okay. And our accrual was also similar to that. Oh, nice. And that was only because in Uttar Pradesh there were certain procedural issues. So you'll find that this year receipt is going to outstrip the accrual to a large extent.
You have to segregate between West Bengal and the others.
Yeah.
West Bengal is a very typical case.
Old case,
we are not accruing anything more in West Bengal. It's an old and frozen case. It is only a question of our being able to take the money out, and we have got comfort from the High Court ruling that it should happen sooner than later, or sooner or later it will happen. As far as Uttar Pradesh, Madhya Pradesh goes, we don't anticipate a problem. It's a timing issue. Last year there was certain procedural thing due to the delay, but there is no mismatch between accrual and Madhya Pradesh. In any case, there's no further accrual. That's over. Uttar Pradesh is that's happening, and as soon as they start releasing, I think we should be better off.
Great, sir. Great. Thank you so much, and all the very best.
Thank you. Ladies and gentlemen, that was our last question for today. I would now like to hand the conference over to Mr. Rajesh Ravi from HDFC Securities. Over to you, sir.
Yeah, thanks everyone for participating in this call. Sir, would you want to make any closing comments before we conclude the call?
I would like to, only thing I missed adding this is we now, as we have said, our management E-team, we've got a new E-team, which are two very valuable additions. We have Rajat Prushti, who has joined us from Adani, or formerly ACC, as the Chief Manufacturing Officer and Projects Officer. Mr. Prushti, he brings in a long experience from in ACC, about 30 years of experience, starting from the mines. He has worked in grinding units, he has worked in integrated units, and then he worked in projects, and centrally he has worked in, so he has a long innings, and then he was in the combined ACC Ambuja setup. He was the CMO of two large geographies. From there he has joined. So Mr. Prushti is a great addition, and he has already brought in a new energy into the manufacturing side, as you were seeing, as you yourself noted in the Project Shikhar initiative which we have started. And we have got Mr. Kalidas Pramanik. Again, Kali has got a very, very interesting mix of experience. He spent 15 years in the cement industry, largely with ACC. From ACC, he went into an adjacent industry, which is fertilizer. He was All India head of the head of logistics and marketing in Coromandel Fertilizers, one of the finest and best managed fertilizer company. And from there, he has come to us. So he brings the good blend of logistics and sales experience. As you know, in cement, how important logistics is, and that's where the next, the wave of innovations will happen. So he will add value. And one of Kali's specialization while he was in ACC, he was the man implementing the wholesale price management in India. He also had launched the F2R, which was launched by wholesale against Concreto of Lafarge. He was the person who launched it there, and he pioneered the wholesale price management. So I expect Kali to bring in a lot of commercial insights and marketing insights in terms of increasing both our price positioning and premium positioning here. And in addition to that, we've got some other additions in the team. We have a new head of IT who has joined us from Penna Cement, Durgadas Mahanti. He was there. He would bring in probably a lot of changes in digitization, especially on the manufacturing side where Penna had done a good work. And then we have our old younger team, Mr. Tamal Pal, who is heading our strategy. Tamal has been very instrumental in getting the new mining leases for captive mines, Vikram, Markibarka. These have been initiatives which have been led by Tamal. We have strong CPD under Mr. Sanjeev Daga, which is now a centralized function. CPD is the division centrally. Mr. Adit Sarogi, of course, every one of you know and interact with, and we have with him Mr. Arun Agarwal, who is our CFO. He is an old hand. He knows everything about the Birla Corporation. He has been here for over 20 years. They're working through various functions. So we have a strong, young, dynamic team, and that's why we have started on these initiatives which you have seen called 4Vs. 4Vs, I'll just spend a minute, and 4Vs and OKR. OKR, as you know, is the objective and key results. It is the methodology followed by companies like Google. It was started by Intel, Adobe, Microsoft, and all of them, and many other companies in India. The importance of OKR is they realize that today's volatile environment and dynamic environment, you need to keep your end objective clear, your longer-term vision clear, but work in short time horizons of 3 months with very, very specific objectives with results which will be visible, which will show you where you are going. And I think we saw the first impact of this in our last quarter's performance. And when we talk of 4Vs, we first talk of vision, which as I was telling you is the long-term objective, but when the next vision is we are saying value, so we're moving to a culture of value creation for all stakeholders, not just investors, everybody there. But the third is most important is today's quantity, which is the speed of action. Speed of action, we including the speed at which you correct your mistakes. Mistakes will happen, but a situation will change there. And finally is visibility, because whatever we do has to be visible to stakeholders and to everybody to perceive that the action is really happening rather than our talking in conference calls. Thank you very much, and a great pleasure being with you all. Bye.
Thank you. On behalf
of...
moderator,
you can conclude the call now.
Yeah. Thank you. On behalf of HDFC Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.